Welcome to the Morningstar Series 3 Stock Picks. I'm Holly Black. With me today is Richard Pease. He's manager of the CRUX European Special Situations Fund. Hello.
Hello.
So you're going to tell us today about 3 stocks in the portfolio that you're particularly excited about at the moment. Where would you like to start?
It's always tricky because we have 60 holdings. It's always tricky to pick 3. And I haven't just chosen the sort of sexiest ones, but I think it's important to just choose some of the ones which give you a bit of a flavour. I think the first stock I would choose is SPIE. This is a French-based but European-wide outsourcing stock, which does sort of hard outsourcing, things like air conditioning maintenance, energy maintenance, environmental stuff. And like a lot of companies, it got very badly hit last year because it actually made what we thought was a very good acquisition in Germany. But it increased its leverage, and the market was tough on mid-caps. It's about a $2.5 billion market cap company. And it was tough particularly on leverage. We've actually always backed people to do things, and this is a very good example. The guy who runs it, a guy called Gauthier, who's the CEO, he has a big stake. He has about 4% of the business. I think it's 4.5%, and the management have the sort of same again. So that's a lot of money, obviously. And he's run it for a long time, very successfully. And the stock got absurdly cheap. It was on about 7 times earnings at the bottom, yielding about 5. It's bounced quite sharply. It's now about 16.5 euros. But even at 16.5 euros, it's still cheaper than it was 2 or 3 years ago when it IPO'd from private equity.
Is that something you look for, management ownership in a company?
Very much so. I think it's much more convincing than the chat if people have actually genuinely invested. And as I said, Gautier's got a big stake and he hasn't sold shares.
Super. So what is stock number 2?
Well, I mean, I think I'd probably go for Dustin. Dustin is a Scandinavian stock. It's quite small. If you put it into euros, it's about 700 million. And it may not sound hugely exciting. What they do is effectively they're a distribution business of IT stuff. The story really is that you get your foot in the door selling your SME, it's a small mid-cap stock company, some IT, and then you can do much more for them. So you have a help desk and you do cloud offerings. And that's a much stickier revenue stream and a much better margin potentially. And the nice thing again about this sort of story is they can continue to do bolt-ons. And so they've done one in Holland, which is good, and they've done a second one. You get the synergies obviously after you've done one, and then you get synergies. And so that's starting to very much go in their favour, and it's not expensive. It's got a decent dividend yield. I think it's 3 3/4 or something, but that should be 4.5 next year. It's nicely. I mean, from a balance sheet point of view, it's got a good balance sheet, and we're very impressed with the management. They're ambitious, but they're sensible.
Super.
So we're happy with that.
Is that sort of size of company, 700 million, is that about standard for the portfolio, or is that on the smaller side?
That's on the smaller side. We only have about 8.5% of our portfolio in stocks under $1 billion, actually.
Okay. So what is the final one we're talking about today?
Well, it's particularly unpopular. It's a company called Stabilus. It's very unpopular for 2 reasons, really. Well, one particular reason, which is it's something to do with autos. Autos have been very tough, as you can imagine, and the very charismatic CEO left to do something else. He's actually kept his shares, as it happens. But what we like about it, partly because it's just the valuation, it's 40 euros, it was 90 euros, so it's obviously very unpopular. But what they do is they do gas springs. And I think in English, if you have an SUV and you click your key, what makes your boot go up is the Stabilus gas spring. It's called a power rise. They do other things too. They do lots of things, everything to do with seats, just making a car more comfortable and easier. So bonnets will now be also using these things too. And car sales have been weak. And so it has been a tough quarter or two for Stabilus, and the stock price has obviously come back very sharply. But it's pretty cheap now. It's 10.5 times sort of thing in terms of PE. And it's got a good balance sheet. And they are very dominant in a global niche, and we kind of like that.
Super. Well, thank you so much for your time.
Pleasure.
And thank you for joining us.